Well, hello. This is Joanne Dennison, CMP, and welcome to another episode of Sit in the Attendee's Chair. Thank you for joining us today, and hopefully you've had a chance to listen to some of the ones posted prior to this. And this is going to be a very different kind of podcast, and I'll explain why in a minute. But first of all, I want to introduce you or have them introduce themselves to everyone who's in the room with me today. And we're actually like face to face. All four of us are in a same room, which is pretty exciting these days, isn't it? We'll start with on microphone number one.
Hi, Kelly here. I'm sure you've heard my voice a lot in each episode.
And Kelly is also handling the whole
Yes.
soundboard today. And
Yep.
we were trying to decide whether to put in special effects or not. So who knows? We might, but thank you, Kelly. Let's go over here. Microphone 4.
Hi, it's Pauline. I've been on a couple of podcasts already. I'm excited to be back here.
And we're excited to have Pauline back because Pauline has been in France, which is her native country, I guess would be better than home since you've lived over here now pretty much full time for 5-6 years. And on a future podcast, you're going to be hearing a lot more from Pauline, but we're really thrilled to have her back.
You probably want about
Great trip with your family.
Yes, it was really fun.
Cool. And we'll get to hear a lot about travel and what's going on in France right now and things like that in a podcast really soon. But we're glad she's here, safe and sound. And on microphone 2, who's going to be the star of today's show.
Ta-da. Is Steve the Great. Hello, listeners.
And what a few of you might know, but a lot of you don't, is first of all, he's not Steve the Great. If you haven't taken a recent CMP class, you have no idea why he's saying that. Please know he named himself. We'll leave that at that. But it seems to have caught on amongst other people, not in our household.
It applies.
It's
It's applicable.
But he is also known as Steve Hoffman, the tax translator. And that is the reason he is our guest today, more than just hanging out and making random comments. Because today, believe it or not, we are going to talk about tax and meetings and events and all the different, maybe not all, but a lot of the common tax issues you run into. And sometimes you don't even know you're running into them, which is part of why we want to educate you today about that. We're going to talk tax, and that's Steve's pretty close favorite thing in the world is to talk tax.
It's the best thing in the world to talk about. You know, living with a meeting planner, I hear her talking to literally hundreds of people, and I've been in, I don't know how many classes of hers, and there are things that come up that made both Joanne and I realize that there is an intersection between tax and meetings and events. And sometimes there are collisions in that intersection. So,
Well, Steve thinks tax pertains to everything, and I have to admit, after 12 years, I'm beginning to kind of see his point. And he also believes tax rules the world, but that's a
Absolutely.
whole nother thing. So first of all, Kelly and Pauline, feel free to jump in. Like if something is like, because if you have a question, like what, that means someone else is having that question too. I've gotten a little too close to this tax stuff, just like he's gotten a little too close to the meetings and events. But so if anything, jump in and be our listeners' questioners, our listener's voice or something. Listener's voice. That almost sounds like an oxymoron, doesn't it? But anyway, so what we're going to start talking about first, because I think it's a big issue in our industry. It's actually, from being around Steve, I know it's a big issue in almost any industry, is the topic of independent contractors, which, he mocks me and us out because we use all these shortened terms. It took me forever to realize every time he said IC, he was referring to independent contractor.
BEO.
Yeah, I know, I'm saying, but, you think we're the only ones that have them, and at least I got him to stop giving me IRS tax form numbers. So obviously this is from the perspective of United States tax. But it does have some international implications and and everything. So we're going to start with independent contractors. And do we want to explain what an independent contractor is, or should I give some examples of where I see it happening in the industry, and then you say what it is? What do you think would be best?
Go right ahead.
Okay. So where I see, having been an independent meeting planner for years, people would hire me, obviously, and they would hire me as an independent contractor as opposed to a paid employee. And at the time I was starting my business was right around the time all of the questions came up about independent contractors. But I look back, and luckily I did everything very safe. Just who knows why, but I did. But here's the thing. There's a fine line between who's an independent contractor and who's a paid employee, which he's going to talk about. So I see this happen a lot with any kind of independent meeting planners, a lot of other entrepreneurs. I see where everything from where a client will try to hire you as a paid employee, but also maybe you're going on for a 6-month period and maybe you should actually be a paid employee as opposed to an independent contractor. So I think from the planner end, it's very important. Well, from an entrepreneur end, it's very important that you understand when are you an independent contractor and when are you not. And for those of you who are hiring people to do work like travel directors or, extra AV help or whoever it might be, that you understand when you can and should hire someone as an independent contractor versus an employee. This is a real big challenge, and sometimes people deliberately try to skirt around it for reasons he'll say, and other times they just don't know they're not doing the right thing. So go ahead and explain what an independent contractor is.
Okay, well, you hit the nail on the head. An independent contractor, first of all, is not an employee. Doesn't mean they shouldn't be classified as an employee. But like you said, many people will tend to skirt around the issue because, if we bring them on payroll, they have to fill out all those forms and they have to do that, and we have to wait for the background check, and it takes so long to get somebody hired. I'll just bring them on as an independent contractor. So the thing is, this is a big issue with the IRS. The IRS believes there's this huge underground cash economy that they believe amounts to $300 billion. Now, I don't know where they got that number at, but they said $300 billion is going out to people being paid and people weren't paying tax on. So they're very much concerned about that. So let me first start with the reporting requirement, if I may. And Joanne always laughs at me, it's $600 or more. If you pay an independent contract, and I say it that way because that's the way the IRS says it. If you pay them $600 or more, you have to report that on a form to the IRS and to the individual as well. $600 or more. $599, you don't. $600, yes. $601, yes. So that's the reporting requirement. If you have somebody that you're using and you're calling them an independent contractor and you pay them $600 or more, then you are required and responsible to file that form. And I'm going to use a form number, 1099 NEC. That stands for Non-Employee Compensation. Used to be on a different form, and they took that block off and created a whole nother form because we don't have enough paperwork. So they created that form because they can process it quicker, more quickly, and go out and nibble on that $300 billion cash economy that they believe. So
what happens when what happens when they fill that form? So what? So they filled out a 1099 NEC or whatever it was. I still just call it a 1099.
Copy goes to the IRS, so they know that
That's key for you to understand. The IRS now knows that financial transaction has happened.
They know. And if that individual would happen to file their tax return and not report that $600 or more, they will get a letter in the mail that said, hey, we got a copy of this. You didn't report it. Give us some more money, plus penalty, plus interest is basically what it amounts to. So they now have the ability, computers don't forget anything. They have the ability now to track assuming that you do fill out that form. And if you don't fill out that form, you as the organization or you as the entrepreneur can be penalized and fined for not completing that form in the case of where you paid somebody $600 or more who was not an independent contractor. Now, an independent contractor should be somebody who is doing the same thing for you that they do for other people. In other words, that's their business. In theory, and everybody disagrees with this, but if you have a plumber come to your house and you pay him $600 or more, you're supposed to issue a 1099 NEC. Nobody does that, so they're not worried about that. They're looking at the organizations and the events, not the individual type of transactions that go on. So
The plumber's still supposed to report that money, though.
oh yes, and if the plumber is running his business correctly and he's not just some guy doing it on the side, hopefully they are reporting a legitimate business.
And this is it, just jumping in, especially when I had the event, was focused on meetings and events. I never got a 1099. If I got a 1099 from one client a year, that was a lot. Even now with doing the speaking and everything like that, I don't get a lot of 1099s. We usually do paperwork, once you live with a tax person, just like living with a meeting and event planner, you start going, okay, I need to do these things right too. And I didn't know I was doing anything wrong, and I reported everything. I was nutsy about reporting any income that I had because I was always so scared of being caught by the IRS, among other things. Plus, it was a legal and ethical thing to do. But go ahead.
Yeah, the other thing, I've been talking at the federal level with the IRS, et cetera, but there are some states now that are beginning to pay more attention to this underground cash economy. For instance, if you are a planner and you had an event in North Carolina and you have and you hired an independent contractor, you, as the person making the payment, must withhold 4% of the money that you pay them and send it to the North Carolina State Department of Revenue. Then it's up to the individual to file a North Carolina, even if they don't live there, to file a North Carolina income tax return and see if they can get a refund. In the city of Philadelphia, out-of-state employers, so you're not in Pennsylvania, are not required to withhold Philadelphia's income tax. They have their own income tax if they don't have a physical location within Pennsylvania. So you're in Pennsylvania somewhere else and you have an event in Philadelphia. Philadelphia has its own little tax thing going about independent contractors. So you're in Pennsylvania, you have an event in Philadelphia, you have an independent contractor, you are required to withhold Philadelphia's income tax.
And I know of at least one meeting planner. I learned about that about probably 15, maybe more years ago. And they moved their meeting because they hired a lot of independent contractors for that particular meeting because they were grading certification exams or something. And they moved it right outside the Philadelphia border, so they didn't have to do that.
Right.
So what
Good
I hear you
tax
saying
planning.
is you need to, she was the same one who was
Check
measuring
federal-
the water usage, but
Check
anyway.
federal and state.
Yeah, check federal and state. But can we go back for a minute to independent contractors? Because can you talk a little bit about who is an independent contractor? Because I made the comment that an independent meeting planner might be hired for a 3-month gig or a 6-month gig, maybe full time, during that period of time where they're not necessarily doing a lot of work for someone else, maternity leave, or that's a big one, I would say, maternity leaves or a family leave or something like that. Well, we only need you for 3 months. We only need you for 6 months.
Well,
But please know that this pertains to more than independent planners. It's anyone who is doing, whether it be they are entrepreneurs or they're doing side work, freelance work besides their full-time job.
could be an association or even corporate planners that hire independent contractors to fill in, like you say, for maternity leave, for instance. If you bring in a person who is going to do the same exact job as that employee did, then the person you bring in, according to the IRS, is an employee. So you should be paying them and withholding and filing as you did for the employee that you're replacing. There was a huge Microsoft case was one of the big ones, where they had independent contractors for like 8 years, and a person who is an independent contractor can file a form with the IRS and say, hey, I think I should be an employee, and they send that to the IRS along with all the reasons why that person thinks they should be. The IRS looks at that. They send a letter back to the employer, say, hey, we got this. What's your take on it? And I think I saw a statistic, it was like 96% of the time they will side with the fact that that person should be an employee. What that meant for Microsoft and those employees for over a period of 8 years was lots of things. The employees over that period of 8 years received stock options. So they had to grant those retroactively to all of those independent contractors.
Microsoft.
They became instant millionaires overnight. There were other instances of they also had to go back and pay some health bills because they don't offer independent contractors health insurance. So some of the independent contractors might have had a health problem or had a baby along the way. Whatever it cost, Microsoft had to reimburse them for that as well. So they do have the ability to let the IRS know that they feel that they are an employee. And like I said, in most cases, because the IRS wants as many people on payroll as possible, because then they're getting regular withholding payments, et cetera, then they don't have to worry about this huge underground cash economy that they think is out there.
So when I first was looking at, when I first went to a session on independent contractors 20-something years ago or whatever, it's when this was like first like really blowing up. And one of the things that had happened was some of the corporations where I lived had laid off a ton of people and then brought them back, but as independent contractors. Now, I could figure out pretty quickly from the people that were talking, it was to avoid paying certain things and whatever. But this was those people, because I remember being taught, and I know you said this isn't as big of an issue now, that one of the things to test whether someone was an independent contractor or an employee was, did they have any other clients? Were they working full time? So what I'm thinking is this actually is very pertinent to right now because of all the furloughs and then layoffs that have happened in the past 18 months. So if someone worked for a company and they get a call from their company and say, hey, we'd like to bring you on as an independent contractor.
Doing the same thing that you did before, they should be classified as an employee according to the IRS.
How many days? Like if they're doing it for a week, no. But if they're doing it for even if they're doing it for a week,
there's no time limit. If you're bringing in somebody who did what they did before as an employee, there's no difference. The IRS says they were doing this before, and now you want to call them this, and we're not going to go along with that. So it's I've seen other cases too where people have come out and said, I need to cut the budget. And don't worry, Pauline, you're an employee. You've been with us 5 years, but, in order to save us money, we're going to make you an independent contractor. And that way we don't have to pay Social Security and all that stuff on you. But we want you to do the same thing. I've seen that, occurrences of that happen, and the IRS will frown upon that. They'll do more than frown, really. So it's a big issue in the IRS. I mean, every audit includes a part of every audit is independent contractors. They will ask you when they come in, one of the first questions, show us everybody who received a W-2 as an employee in a 1099 in the same calendar year, and they'll ask you about that. And there are some logical explanations of that. You started as an independent contractor and they hired you, so you would get both forms in the same year. Or you left as an employee and they brought you back as an independent contractor, and you can come back as an independent contractor, just not doing the same job. The other issue is control. How much control do they have over you? If you're an independent contractor and they tell you, you need to be here 8 to 5 Monday through Friday and sit at this desk, and we're going to give you all the tools that you need to do this job, sounds like an employee, doesn't it? You know, you got to come in, you got to sit here, you got to do this. Here's how we want it done. Here's the tools, and here's when we want it done. So that's issues of control, behavioral control, the IRS calls that. So,
And, the thing is, what applies to many of it, situations you've seen that this applies to, not that you get involved in the business parts of this. These are huge issues in like hair salons, spas. Are they employees or are they independent contractors?
Uber and Lyft have been another great example in the past, have been FedEx and UPS drivers. And
Not FedEx and UPS, but probably DHL because
Right.
they owned their own routes.
Right.
FedEx and UPS have always been
big
employees.
thing going on in California.
But like yoga studios, Pilates studios, all those, and I've known people in those situations who were fighting with the owners because they were being told when they had to be there, here's the equipment, this is your schedule, but we're going to pay you as an independent contractor. So just to give you some other real life situations where this is an issue. Kind of interesting. I've asked at times when I've been in certain places, are you employees or are you independent contractors? Because it usually tells me something about the organization as a whole too. Like how are they running it? Anything else you want to say on independent contractors?
No, and I know you are hospitality people, and you always like to give gifts. So
Well, we're going to move on to that in a
Okay.
minute, but hold on here. Let's stick with who the heck is an independent contractor. Can you guys think of anything that doesn't, like you're thinking of an example and going, I'm talking to Pauline and Kelly, they're here on your behalf. Can you think of anything? Do you kind of get the independent contractor thing?
Yeah.
Yes.
I
Yeah.
think it's pretty clear.
they are.
You would think so.
It's clear now. I didn't actually at the start of this. I wasn't really sure what an independent contractor was, but
And they're both employees, which is why we brought them on. Because
Ours, yes.
Yeah.
Yeah, that's a frequent conversation in the businesses. Is someone coming on as an independent contractor? Are they going to make $599 or less? And I think we both feel better, even though obviously it's more complicated and probably more expensive for us and everything. But it's like, nope, putting them in as employees. Nope, not dealing with this, because also I don't want Steve's business to blow up because he, God forbid, did something unethical or against the IRS. That's kind of destroys your business when you're like a tax expert. So, plus we've had some international people working for us, and I just never wanted to screw up their visas. And I guess even Pauline, that's part of the letter for you, right? And
Yeah, it's
everything.
pretty complicated if you're an independent contractor, because then you have to register as self-employed, I think, with
As what?
self-employed
Okay.
with USCIS, and then they can just wonder, what are you doing in the US? Are you even working for someone, or that type of thing? So
Employees much better.
yeah. I mean, you
everything's
can do
trick-
it. There's ways
Yeah.
of doing it, but
You'd
it's a lot more complicated. A
Yeah.
lot more scrutiny.
You'd probably have to have a very viable business,
Yeah.
probably with a history and things like that. But, I think it's important we talk about this because I think it happens a lot in this industry. How many of you bring in TDs, travel directors, whatever you choose to call them, help on site? And heck, I'm well aware that in some cases they have been, hopefully not now, paid under the table. And, you got to understand, I'm not a fan of paying anyone under the table. Never have been. Never done it to the best of my knowledge. And fought it if someone tried to do it for me. But a company can't claim that money. For example, if they hire you and they don't do the 1099 and the independent contractor stuff, they really have no reason to deduct it from their expenses. So, right?
Right. They will generally try and hide it somewhere else somehow. Once you start down that
Miscellaneous.
unethical path. Yeah, miscellaneous. That's a good catch.
And come on, you listeners. I know what has gone into our miscellaneous lines. I'm well aware of what has gone, at least in the past, in our miscellaneous lines. So, yeah. So just know they can't really actually deduct it. This is, of course, a huge issue. Wow, we haven't even touched it. I just thought of something. This is one of the issues we run into with tips and gratuity. A lot of organization can't give tips and gratuities to hotel staff or venue staff because it has to be trackable. So some of the venues come up with ways that you can put it on the master bill and they disseminate it, and therefore it can be tracked. Wait, hold on before we go on. Now this has got me thinking about this. So this is an issue, Steve. I don't think you and I have ever talked about this.
Oh my.
12 years. Whoa, new topic. So this is a big issue when you have an event, let's say at a hotel. You got, whether it be a day event, multi-day event, you want to tip the appropriate people, and this is a big issue. Now, some organizations won't allow untrackable tips. Like, I know meeting planners who would take thousands of dollars on cash. I don't know if this still happens. I think so. I've heard it in the past few years on site. So they could literally hand out cash tips. And I'm guessing it got put in miscellaneous. But a lot of companies, because I remember even when I worked for a lot of nonprofits, having to say, I'm sorry, I can't, please build it in somehow. Can we do it? So sometimes they would put an amount in an envelope and do it and have the employee sign showing, like at the end of the meeting or something. Like they would break the tips out that way. So I assume they would do a 1099 if that's what they did. Here's an envelope. I'm going to tip Pauline. I'm going to tip Kelly. I'm going to tip.
Are you a big
Mary.
tipper, like $600 or more?
Maybe for a big multi-day meeting, if they were
Really?
like, I'm trying to think of who would get that.
To an individual, if it's less than 600, it's considered de minimis. The organization would still be able to,
Deduct it. Okay.
as
But the idea of them getting the signatures to show that they
that's
got
a
it.
very good idea.
Okay, so I know this is actually, it's so funny. I hadn't even thought of this until right now, but I know what an issue this is in the industry. How do we tip? We're not getting into how much to tip because I know that's another huge issue. But how do we tip people legally, ethically, so we can deduct it and our company will let us? And the other one that sometimes they do is the hotels will let you put an amount on the master bill, like credit, like you give them $1,000 to put on the master bill, and then it's disseminated somehow from there or something.
That's generally then up to that hotel.
Right. But
They-
that would be a way to do it. But the cash in envelopes is okay with the signatures, and if
I
it's
think
$599 or less,
Yeah.
they don't have to worry about 1099s.
Well, no, if it goes to 600 or more, you should get there. Have them fill out a W. You got to get your social security number, name, and address, obviously, for reporting purposes.
Right.
And that's generally not.
But I don't think even over a multi-day meeting there'd be many employees
No.
getting over $599.
I wouldn't think so.
So that's a way of doing it legally, ethically, and so your finance people are happy. You've given them cash. They legally can do it without being reported because it's, I'm going to say $599 or less, because he and I go through this conversation all the time and I get confused.
De minimis. is
Yeah,
what it
but I
is.
get confused about the 600, which way the 600 flies. So this is why he keeps saying 600 or more and I keep saying $599 or less, because it's the only way I can keep it straight. But that's, again, that kind of falls into that independent contractor, but really he's saying it falls into the de minimis, which he's going to talk about more now because, well, we're going to talk about, how do you want to talk about W-2s and gifts?
Employees.
Yeah, let's talk about, okay, so this particular section is on how these things affect employees. And we'll jump in and talk about, an example from what would happen at a meeting or event. So maybe I'll start with that, in fact. So we're doing some kind of event, and we're going to give a gift to someone. We're going to give a gift to someone who's retiring or someone who won an award or something like that. And, yay, we're going to do that. And don't forget to, and how many times have you had to run out to the Apple store to buy something in the city you're in because nobody told you this? But anyway, so we're going to give someone a gift, an employee a gift for some reason. Okay, so we did it. So
The value
it's
of
a gift. Why
the-
do we care?
Because the value of that gift, whatever that it happens to be worth, fair market value, arm's length transaction, willing buyer, willing seller, that determines the value. And if you provide that to an employee, that's considered to be compensation value, and thus subject to taxation, should be reported on their W-2 at the end of the year. The value of that would be added to their wages, regardless of amount. It doesn't, the $599 or $600 doesn't apply.
So it could be $100 gift.
Could be $100 gift, and you're giving it to an employee. That's considered employment related, obviously. An employee is an employee is an employee is my motto. If you give anything of value or cash to an employee, it's got to be reported through payroll and end up on their W-2 form at the end of the year.
So you need to make sure, because probably whoever told you to go get the gift is not thinking of this. And, you know, we have these discussions about how do you get to be good friends with your finance department. This is a way. This is a good way. They love it if you come to them and say, by the way, we gave this gift to this employee and this is what it's worth, because then they know what to do with it, but they love the fact that they didn't get a, you did what? kind of thing. So it's very valuable for
I
that.
see this a lot with gift cards to employees, especially around the holidays. Gift cards are considered the same as cash by the IRS.
Again, we're talking employees. Remember
Employees, any amount, $25 gift card, it's cash according to the IRS and should end up on their W-2 at the end of the year. Another word that pops out sometimes is they want to avoid, so they hang a fancy term on it. It's called honorarium. We want to give an honorarium to this employee because they did a great job. You know, it was somebody in some department kind of helped put the meeting together. I want to recognize them because
Obviously, they didn't have a meeting planning department, though.
True. Or maybe they worked with a meeting planner and caused
Drove
them
us up the wall.
great
No,
grief
sorry.
and woe.
Yeah. Okay.
So they call it a different word, an honorarium or stipend is another word. But it all comes down to they're an employee. The employer is giving them cash or something of value for their efforts, and it should end up on their W-2.
So wait, I want to back up for a minute. So that's employees, but can we go back to gifts to non-employees?
Yes.
Like it's an association meeting, or, you know, the alum from the college came back and spoke, or whatever. A non-employee, and you gave them a gift. What's that look like?
$600 or more. So if
$5.99. Go ahead. Is that
if they're
include tax, sales tax? Sorry.
if they're a non-employee, it reverts right back to the same independent contractor rules. If they're a non-employee, like Joanne and I, we see this a lot in our speaking. It's called an honorarium. An honorarium, according to the IRS, is a gift of disinterested generosity. That means you're going to give it to them and expect absolutely nothing in return.
Like a speech.
Like a speech. So,
Or a performance.
Or a performance. If you're, there, that should never be in writing. If you come speak for us, Joanne, we're going to give you a $750 honorarium.
Oh, when we first got together and he saw some of my letters of agreements with people, and it would use either honorarium or stipend. I'm like, what?
Red flashes everywhere.
Yeah, exactly. And I'm like, what?
Well, see,
Because to me it meant, and I know it does to a lot of you, like, we're not going to pay you your full fee because we probably can't afford it, among other things, but we're going to give you something, so we're going to call it an honorarium or stipend. That's usually how I've run into it as a meeting planner and as a speaker. The people are like, we're going to give you something.
But what that really is
Payment.
an exchange of services for compensation.
Mm-hmm.
That's how the IRS looks at it. You had to do something in order to get that money. It was not disinterested generosity. It was an exchange of services for compensation. So,
And this would be true for both gifts or cash.
oh yeah, and it should. Like you say, I've seen those agreements and contracts and things. If you do this, we'll give you $1,000 honorarium. No, that's $1,000 payment for services. So that would become, even in the case of a speaker, reportable under that 1099 rule, $600 or more, $599, $600 or more. So it should never be written. It shouldn't be really a handshake or a wink, wink. type of situation. I see it quite often, and a lot of people say, well, it's an honorarium. We don't have to pay tax on that or report it. And yes, you do for non-employees, for a speaker. So things like that. You mentioned you want to move on to retirement gifts.
Well, we can retirement, and then it dawned on me something else. But go ahead.
No,
Go for it.
something else that bouncing around inside your.
My head, as usual. What isn't bouncing around my head? Okay, so sidebar. I just realized I really never or had him explain who Steve is, other than the tax translator, and why the hell he gets to even talk about this stuff. And he started out one of his earliest, I think his first we'll call real career versus some of the other things he did, was for the IRS.
Yes.
15 years?
15 years.
This is way before my time. So 15 years, starting out with like the customer service desk and
Yes, handing out forms, answering questions, and then I did the last 3 years in management, which was really the straw that broke the camel's back. So,
But before you went into management, you were doing like investigation. I know
Yeah, I
you don't
was,
call them that. I forget what you call
I
them.
was in field branch collections, which meant I was out in the field. People owed money or didn't file tax returns. It was my job to get them to pay it or file their tax return. And that may have involved many things. Seizure and sale of your house, seizure and sale of your boat, your car,
Trying
closing
to get
your
someone
business.
exhumed from their grave.
Yeah, yeah.
Yeah, you didn't win that one. from what I
No,
hear,
she
though.
had a big diamond ring on her finger. I wanted it. It was worth money. But my boss wouldn't. He thought that might appear funny in the newspapers. So maybe overstepping the IRS bounds.
These are the things you find out when you've been with someone a while. Just be pre-warned, okay? You don't find these out in your first few months. You know, you find them out later on and go, what? And then went on to
Probably.
CompuServe, Quest.
Yeah, CompuServe, where was owned by H&R Block at the time, and H&R Block was paying a lot of money to license their tax preparation software. And they woke up one day and said, hey, we own this computer company over here called CompuServe. Why don't we have them write this tax program? And I saw the ad, and my hook was it was a tax program that prepared 18 million tax returns. So I had something to do with that. I was brought in as the kind of
Project manager.
well, initially the tax knowledge.
SME, subject
Yeah,
matter expert.
I brought in 8 people who were tax people, and we talked with the programmers, and we finally got them to understand taxes a little bit better. And then that's where I really started the translation business, because we'd go to these meetings and the programmers would say something like, well, do you want that value retained in permanent memory? And they would lean over H&R Block. What did he say? I said, do you want that number to appear on the front of the 1040? And they said, well, yeah. I said, okay. So we kind of figured that all out.
And
Yeah.
then you went to do, 2 or 3 municipalities?
Yes,
tax
I was
person?
a city of Dublin, city of Westerville, a couple other little towns around there.
These are OHIO towns, if you didn't know that, you know.
Yes,
Mm-hmm.
OH,
Uh-huh.
IO.
And then from there you went to the colleges, right?
Oh, yes. I became the first ever tax manager at the Ohio State University,
You could have chimed in too, girl. You know.
which I thought was going to be a great job. I was going to be a tax manager at a tax-exempt organization. This was, I sat around, read paper all day, take a few hours for lunch, but discovered there were a lot of very special and unique tax implications to being a tax-exempt organization. So
Go ahead.
Ohio State, West Virginia University, and
GW.
George Washington University. Yeah.
And some of them he had other finance-related responsibilities too.
Like
but
payroll.
his expertise right now, well, what he focuses on is nonprofit tax. So if you ever have any tax question, he's willing to talk tax to anyone. Trust me.
Yes. All you
and-
association people out there.
But definitely, if you ever have a question about nonprofit tax, that's what he focuses on now. Okay, so back to Well, I just wanted them to know.
Sure.
I realized usually I introduce you more than I did, so
Well.
we'll just leave it at that. I started to say last time. Retirement gifts, length of service awards. You want to say something about that?
Oh, yes. You know, a lot of times at your meetings, you may, you know, Kelly's been with us for 40 years now. Let's give her and
If you make 40 years, then that's going to put me at about, yeah, if we're still working together by then, I'm going to consider myself damn lucky in a million ways. Go ahead.
So she's finally decided to retire, and we want to obviously give
I'm
her,
not, you are. That pretty much would sum
I'm
it up.
talking about
probably.
Kelly. No. So we want to give her a retirement gift. So the IRS has limits on retirement gifts. You can give up to a retirement gift up to $400 in value without it becoming subject to any taxation or reporting. Now that number $400 has not changed in years. So some of the retirement gifts go way beyond, you know, your basic Timex watch that you used to get. Some of them get to be
I'm sure they exist anymore, but go ahead.
Timex.
Yeah.
It
No,
takes-
go ahead.
Takes a licking and keeps on ticking.
Yeah, I don't think so.
Yeah.
More likely to
So
get
some of the
big ones.
what likely to get what?
I'm trying to think of some of the names of the
A
big-
Rolex.
No,
No.
Rolex. But what are some of the real big ones that are in right now?
I don't know.
Watches.
Less- Yeah, you know the ones with the real big face that are so. Okay, never mind. Go ahead. So retirement gift. Okay, so $400.
You don't have to do anything, but like I say, a lot of the retirement gifts now are in excess of $400, which makes it reportable and taxable. And when I say $400, if it's a gift of $401, the entire $401 is reportable, and so you don't get to deduct the $400 limit from that. So
Oh, that's interesting.
yeah, it's crazy. It's what it is.
So this, you know, you may think this doesn't pertain to you, but I can guarantee that a lot of you are going to end up having to deal with some kind of gift. So even knowing that, you know, the retirement gift is different than the regular gift and everything like that, even if you don't remember these exact numbers and everything, I talked to someone this past year who was working on some event. And I said, did you tell them if they do this? And they were going through the whole gift thing, trying to get their stakeholder to understand, you need to think about this because we're going to have to do taxes on it. And we're going to, you know, and they were like, no, you know, it doesn't matter. And they're like, yeah. So, you know, being aware of it, even if you don't know the exact amount, but before preferably you decide what the gift is to know what the consequences are.
Give me a call.
I think is give him a call, your finance office, but you know, being aware of this because a lot of us do get pulled into doing gifts for something.
Or another favorite is length of service awards that might be presented at your meeting to an employee. Same thing. It's the $400 value. However, there's some other things. It's got to be something what they call tangible personal property. Yeah, it's got to be something you can touch, you can feel.
Rocking chair.
A rocking chair. 5-year after your first.
Colleges love to give rocking
Yeah.
chairs with the school logo in the school colors.
Mhm.
Kind of looks like the front of a Cracker Barrel when you finish, but you know,
Yeah.
I
Yeah.
happen to love this.
So it's got to be
Have you ever
tangible.
seen a Cracker Barrel?
Cracker-
Oh my gosh, we have to
Oh
get
my
Pauline
gosh.
to a Cracker Barrel.
Yes.
Really?
Oh my gosh.
Never been.
Okay.
Oh.
Down home cooking.
Yeah, and there's rocking chairs across the whole front of the porch, and if it's near a college or university, it's usually done in the college colors and has the college logo, or you can buy plain ones.
Got it.
Yeah. Nearest one I think here, Tewksbury probably, but anyway, see the things, you know, she gets fresh, you know, French wine, baguettes, and chocolate. We get Cracker Barrel, but I like Cracker Barrel, so
I do too.
I do too. Yeah, that and Chick-fil-A. We know Kelly.
Love
Yeah,
Chick-fil-A.
yeah. Kelly's having Chick-fil-A withdrawals because there aren't a whole lot in Massachusetts. So yeah, she's working on it. She's got her
So-
car now, so she'll drive for it. Anyway, go ahead.
Excuse me.
Sorry.
These were important things. So
Yes, they were.
it's to wake people back up for part 2. You know.
Just a few quick points. Length of service awards, $400 or less. it's got to be addressed as part of a meaningful presentation, like in front of the whole group. So to give somebody a length of service award behind closed doors doesn't count as a length of service award. You can't do it as with the IRS. You can't make it disguised compensation. I can't give you a raise this year, but I'm going to give you $1,000 5-year length of service awards. And I keep saying 5 years because you can only get one once every 5 years. So that's the way length of service awards work. If you happen to have meetings that they call everybody up and say thank you for your 5, 10, 15, 20, 25, 50 years worth of service.
And again, I don't at least expect you to become a tax expert. Other people may vary. But being aware, I think, one of the things that has happened with me, with him teaching me so much about tax, actually, it's just kind of, you absorb it because you're in the house, just like he has absorbed meetings and events.
I had no choice.
Ditto. Is just knowing, like, wait, I think there's something I need to go check out about this. I kind of remember him saying something one day, like, and just so you know, this podcast will probably run over what it usually does, so feel free to listen to it in multiple parts. That's the beauty of it. You can stop it whenever you want and go back to it. But and some of these might not even pertain to you, at least in your current job, but you never know when you're going to change jobs, so it's always good to know these things. So let's talk. Wait, let me see if I want to. So for a lot of you, this one may not pertain, and we're going to talk about nonprofits. And the thing is, though, I have found that a lot of people in our industry, even if they don't work for a nonprofit, end up somehow being involved in a nonprofit because people go, wait, you know how to plan an event? Could you plan the charity walkathon or the charity gala dinner or the church this or the, I got a few years of experience on that. And so it's really still good to know, and you also never know when you're going to go work for a nonprofit association. So wanted to find a little bit, well, go with nonprofit associations. Like, what does that include in terms of, the ones people think of, the charities like March of Dimes and
YMCA, YWCA.
Right. But then like business professional associations and chambers.
Chamber
and
of Commerce, your JCs, your Kiwanis. These are all nonprofit associations of one kind of another. Most of us are probably familiar with what's the 501c3. The 501c3 is a nonprofit organization, but there are 26 different C's. There's C1, 2, 3 through 26. Most of us, C4 is an association or social organization. So the 501c3 is limited mainly to higher education, research, hospitals, scientific organizations. But there's all kinds of exempt organizations that fall under Section 501. And something that applies to all of them is this thing the IRS came up with called unrelated business income tax. So that's all the money you get from doing something and having an activity that is unrelated to your purpose in life or unrelated to the reason why you got a tax exemption form. So I'll use higher education. A lot of colleges and universities have basketball arenas, and off-season they will have concerts in there, or I've seen motocross in there, I've seen Jeopardy in there, I've seen the Worldwide Wrestling Federation inside a basketball arena.
Well, so that definitely fits a college's mission.
I think she was being sarcastic. But these are all activities that really don't have an educational purpose. I mean, they're purely entertainment. So that's one example. So if you're doing something that is not related to your mission, your purpose in life as an exempt organization, or to the reason that you received your tax exempt status, that revenue then is taxed just like it would be to any business that that does that type of activity. It a real brief history. It all has to do with macaroni. New York University acquired more than 50% of the stock ownership in Mueller's Macaroni, and it was making money like crazy. The auditor who examined NYU said, "Oh, this is interesting. Everybody else who's a stockholder, they're being taxed on this, but this New York University is not. And why is that? And it doesn't have anything to do with education." And in 1954, it appeared in the Internal Revenue Code, this whole thing called Unrelated Business Income Tax. First of all, let me just say, like another prime example, and this is one of the basic truisms in tax law. If you receive advertising revenue, if you're a nonprofit association or organization and you're paid to advertise something for somebody, that has advertising revenue has absolutely nothing to do with whatever reason you got your tax exempt status.
So I want to clarify this. So for us, a lot of them, I mean, there are still some places that do ad journals, and or signage or ads on websites or things like that. Can you please clarify the difference, because this was enlightening to me years ago, difference between an ad and I don't even know what you call the other thing.
Sponsorship?
Well, the message.
Oh.
Well, ad and sponsorship. What about sponsors that get ads or something as part of the sponsorship?
Sponsorships. Schools have a lot of sponsors. All right. If there's a couple of just real quick rules. You have a sponsor for your nonprofit association. If, number one, usually they want something back. If it's
that's a sponsorship. Otherwise, it's a donation. Do you listen to
Right.
my class at all?
Right. It's a sponsorship. The donation is a gift of disinterested generosity.
Right. Sponsorship.
They just
but
give
both
you the
parties
money.
get something.
Yeah, this is a sponsorship. I know. It's amazing, this whole intersection between tax and meeting planners, isn't it?
You can imagine our dinner conversations.
So first of all, if you have a sponsorship and they want something back, you can give them something back as long as it doesn't exceed 2% of the value of what they gave you. And it still stays, the whole thing still stays non-taxable. So that means that whatever you give back, you got a value. Now in colleges and universities, they get sponsors, but the sponsors want to park close to the stadium. They want to set in a skybox. They have to value all of these things. And if it's more than 2% of what they received, then the entire sponsorship becomes subject to taxation. Number one was sponsorship. Now what she's talking about, though, sponsorships, you can acknowledge your sponsor. There cannot be qualitative message in how you acknowledge your sponsor, meaning Stacy's Potato Chips is a proud sponsor of Ohio State football. That's good. If you were to say Stacy's Potato Chip, the best potato chip in Buckeye Land, that's qualitative. That's telling you it's better than something else. That makes it advertising. If you receive a sponsorship like, again, I'll go back to the football ticket world, and on the back of the baseball football ticket, if your home team wins tonight, get $2 off at Joe's Pizza, tonight only. That's called a call to action. So if you have a call to action, got to do something right away, or it's qualitative, that takes it out of sponsorship and makes it advertising, subject to this whole unrelated business income tax, which is currently taxed. The tax rate is currently, it's been reduced, it's only 20%. So if you got a $10,000 sponsorship and you were qualitative or you had a call to action, all of a sudden you just lost 20% or $2,000 of that to Uncle Sam. So
that's a discussion to have if you're doing an ad journal, if you're doing sponsorships, or if you're doing any kind of signage, what the message of your sponsor is, so it doesn't become the message of your advertiser.
Right.
So that's, it's a very fine line, but it does create a difference. So as he's saying, all advertising, true advertising revenue is subject to UBIT.
Correct.
So sales, we have a gift shop at our event, a bookstore at our event, or we're selling online or whatever.
Are we talking about sales tax now?
Um,
Sure.
well, no,
Oh.
actually talking about UBIT.
Oh, okay.
I thought we were
Um,
staying in the UBIT theme.
Sure, we can do that. If you have a shop and you're selling things that aren't that if you were selling educational books, that might be different. But if you're just selling today's top 10 popular fiction books for some reason or other, I don't know, you could
What about
be
clothes?
clothing.
Like hats, sweatshirts with the nonprofit logo or the theme of the conference or the sponsors logos.
Right. Those all of the and we're only talking about the net profits from these. In other words, that's subject to the tax. So if you happen to sell some clothing, you take out the cost of the clothing and any other expenses relating to its sale, and you end up with a net profits 20% of it's what it's going to be.
You don't have to go that specific. But
Right.
Okay, gotcha.
Right. So it's only the net
sales.
profits.
And what about space rental? So we have a lot of nonprofits. I know you deal with a lot of this in college and universities, but there's a lot of other nonprofits that now have conference centers, or they rent, various rooms, even for meetings or events, or grounds. A lot of times it's grounds, a park, a sports field, whatever. What about that?
Okay, if you're renting space, there's one big thing I think you should be aware of. You can rent space. The space rental is an exclusion to the unrelated business income tax, as long as you don't provide any services along with that. So by services, you have a wedding, a wonderful chapel, and you rent that out. If you're just renting the chapel, it's all space. That's one of the exclusions. But if you're providing catering or flowers or music or whatever else goes along with weddings, if you're providing those services, the provision of those additional services makes it fall into this world of unrelated business income tax. If you have a meeting room and you're renting out, and you're a nonprofit and you're renting out this meeting room, and it's just, we just want to use the room, we want to have a meeting, don't need anything else, no services. You have a meeting room and you're giving them AV and you're bringing in water or snacks on break, that throws it into the world of unrelated business income tax. If you happen to rent that meeting room to another nonprofit group, it's not subject to the unrelated business income tax. But if you're renting that room to, I don't know, pharma, and they want to have a meeting in this room, that's a for-profit organization. Pharma's big for-profit organizations. Then and you provide no additional services, it still is not going to be subject to income tax, this income tax.
So I know a lot of you who are planners for nonprofits also do get that fun role of handling the sales and rental of, any facilities you might have to, of course, generate other revenue. So I think you being aware of that is really important. I'm sorry, you mentioned equipment rentals in that whole thing too, right? Yeah.
Yeah, AV.
Okay.
Any type of equipment.
This actually came up on a nonprofit board that I'm on recently, and it's something I think actually I can think of how this affects. So one of the things you always talk about is how a nonprofit cannot support a political campaign in terms of an election for someone, because that's part of the guidelines for being a nonprofit, is that you will stay politically, at least in terms of candidates. I'm not sure so much about bills or whatever, but definitely with people. So as elections come up, this is frequently a problem for nonprofits.
And elections are coming up.
Elections are always coming up, as
Yes,
far as
they
I'm
are.
concerned. It seems like we're just every year, even if it's 2 years or 4 years away. But they can't support a political campaign, so that means no signs, no whatever. But you can't, and the nonprofit can't take donations from the political campaign, right? Or no, they can't make donations to the political campaign.
They can't make donations to the political campaign.
So here's one of the things. Here's a similar thing I can see happening that just be aware of. Is the nonprofit board I'm on right now, what recently came out is a candidate wanted to join this organization. It's a membership organization as a candidate. and therefore be able to network and subtly, in quotes, campaign at the events. And we had a long conversation about being concerned about if we opened a door to a political candidate being a member. It was really the election committee for that person was going to be the member, more than the member. And we had a long conversation about this, and this is partially why. And I think it's something for you to think about too, is if you are renting any of your event space to a political campaign, make sure, as you may have heard me say before, you need to make sure, well, one, will people see it as your endorsement? Because I've seen hotels even end up with this, where it's like, well, they had it at that hotel. They must be, of course, it's even more interesting when the hotel has the candidate's name on it. But it is, no matter what hotel it's at, it's like they automatically assume that the San Francisco Marriott or whatever, the Boston Harbor Hotel, whatever it is, oh, well, they're a supporter. No, they sold the space, for Pete's sake. They got a good piece of business. But for a nonprofit, that could be even a harder, even if it was all done legally and ethically and you're not supporting them, you're just renting the space, it can be dangerous territory. Just something to think about.
You must offer the same space to any opposing candidates as well. If you were to have like a town hall.
But I mean, if they rented
right.
If they rented it, if it was free, yes.
Right.
But if it was rented, anyone can do it.
Right.
Yeah. So let's move on to gaming, games of chance. Now, we see this a lot at events, and I bet you they even happen, which will probably go back to the whole $600 thing. I see them happen at corporation events, but definitely at nonprofits. Let's do a 50-50. Let's do, and I'm like, I remember going through this a lot. Professional association chapters, chambers I've been involved on, more traditional nonprofits, and going, no, you can't just decide to have a 50-50. You just can't do these things. So you want to talk about that? And also talk about, would there be a difference if it was a for-profit, like a corporate meeting, and they did something like games of chance?
Well, the first thing I want to say when you talk about games of chance is check with the state in which that game of chance is located, because each state is different. Some of them you got to apply, you got to be approved. Other ones got to have things where if it's a one-day event, you might be able to not have to do anything, but you still got to let them know. There are lots of rules around games of chance that vary according to each state. And the other thing is the IRS says that a lot of people consider that a game of chance to be a charitable type of activity, but there's nothing inherently charitable about gaming. It's a recreational activity, so that has the possibility to throw that back into the world of the unrelated business income tax, because you're receiving revenue from an activity that gaming has nothing to do with your save the trees, save the whales, save the dogs, whatever. It has nothing to do with that, and it's revenue that comes in, and if it's not related to your exempt purpose, the IRS wants some of that money, possibly. So that and the state rules are big, vary with each state, depending upon where you are. So check with them, because some of them tightly control it.
And that's kind of good recommendation for almost anything. Check your state and local municipality, the city you're having it in, the county, because they all have their own funky, weird rules.
Well, like you said before, I think fire codes, capacity limits.
Yeah, we run into them for a lot of different things.
Mm-hmm.
What about auctions? So we do a lot of those in nonprofits, for sure.
Okay, so you go to an auction and you buy something, and it's you pay more than the value of that item. In other words, a lot of them will say 3-night stay at the hotel valued at $600.
So let me stop right there, because
I
this
know.
is what I see. Two things happen when these are put up, and hotel stays are a great one. Either it's done full rack rate, $400 a night, so it's a $1,200 value for those 3 nights, or they bring it way down and say it's worth $450, like $150 a night. And what he's getting ready to explain obviously, when it's the higher, the rack rate, it's to make people go, wow, this is a $1,200 value. You know, I'll bid and I'm going to be getting a great deal if I buy it at $800. So what happens if they do that? It says it's a $1,200 value, but I bought it at $800. What would happen?
If they, well, at nothing really. I mean, they receive something. Here's what the organization has to do. First of all, they should be sending a donation or a gift acknowledgement receipt letter. Thank you very much for your purchase at the auction. Please consult with
Which means it falls to the
Yeah.
meeting and event planning department. Go ahead.
So then and then you always state, please consult with your tax preparer. You might state the value of the item and what was paid, and please consult with your tax preparer. Don't ever give tax advice. I wouldn't. If you ever have anything to say about charitable contribution deduction, use the word may. It may be deductible because you don't know the individual circumstances on their tax return. There are limits on charitable contributions at the individual level. So you send out that it works in the opposite way even better. They buy a hotel stay for $800 and it's really valued at $600. The only amount the individual is permitted to deduct is that $200. That's the $200 over the value. That's the contribution because they received $600 worth of value. So they paid $600. They got $600 back plus $200. So the $200 is the only thing that is an actual contribution.
So that's why an organizer or a hotel or whoever might do that is put it down to like the minimum rate that they would charge for the rooms because they want people not only to feel, well, they won't feel like they got a deal if they, spend over it, but they will get the tax deduction.
Right.
So it's kind of like know your audience. What's going to motivate them? Is it going to motivate them to think they got a great deal? Or is it going to motivate them to be able to deduct it from their taxes? And it kind of depends when I think back on what type of auction, who the organization is, how people fall into that, I would say.
I see a lot of this too around fundraising dinners in nonprofit associations. If you $100 a plate dinner, you should receive a receipt acknowledged. Thank you very much for attending our fundraising dinner and your $100 contribution. The value of the dinner you received was $50. Please consult with your tax professional. What that means is they'll only be able to take as a charitable contribution the $50 over the value of the dinner. So, and they should be sending out these gift receipt acknowledgement letters because the individual is going to need that in the event they're ever audited. Look, I got this thing.
And depending on the organization, it may fall to the meeting and event planning team. In other places, it's going to fall to the finance team. Depends on how big your organization is frequently.
If it's a large nonprofit, they probably have a fundraising department who know more about you than you could ever believe.
Yeah, but meetings and events usually fall under that
Right.
or are part of it. So, okay. Let's move on. Did you have anything else on nonprofits you wanted to say? Or?
No.
Okay. So let's move on to sales tax.
Sales tax.
Because sales tax, I see it affecting people two ways. And as the buyer, we're talking again about nonprofits. What if the buyer is tax exempt? So let me just in a minute talk about that, or let him talk about it really. But the other thing is if you're a seller, and I see this happen with venues, for example, or other suppliers to the industry who get told by someone, but we're tax exempt, you shouldn't be charging us tax. So again, we're talking about sales tax, and I know one of the first things he's probably going to say is a lot of things vary state to state, as we know all the tax rates do and everything. But this is just overall about being tax exempt for sales tax. So go for it.
All right, if you're a nonprofit organization, probably within your own state, you are exempt from paying sales tax on purchases in that state. However, as a nonprofit organization in any state, you can apply for sales tax exemption in several other states. So if you're a nonprofit organization in Massachusetts, but your meeting's going to be in wherever, Texas, just pick a state. You can make an application as a nonprofit organization in Massachusetts to be exempt from your purchases in Texas. And if Texas grants you that, that means you don't have to pay sales tax on your meals, your hotel rooms, anything that you purchase from or in Texas. So it's sort of worthwhile to kind of explore that if you're a nonprofit association and you have meetings outside your state.
And a lot of, I've met planners. I had one in my class a few years ago, and she was on the international, she was the lead planner for the International Worldwide, one of the fraternal organizations. And so they were going around the world, but it's also located different places here in this country when they're U.S. based, plus she has a lot of regional. And I remember this coming up in class, and she said, oh, yeah, we filed in every state we can to make that happen.
It's
So
a big money saver.
it is,
Yeah.
absolutely.
And I worked with that one organization, and we became tax exempt in 26 different states. So saved a lot of money.
So, you know, if you move your meetings around or you're purchasing from a particular area, that is, you know, it's definitely something to.
Yeah, you don't have to have a meeting there. If you were to make purchases of binders, and the binder company is
Binders.
binders, and
we
your
know
binder
binders.
company is located in a state that has granted you sales tax exemption, then you can get all those wonderfully colored binders sales tax free. So.
All different sizes too. So what about a venue? So this is interesting because it came up a couple of years ago. A friend of mine who's a DOS at a property, she called me, but really she called Steve and said, you know, I'm running into this situation where this nonprofit is telling me I can't charge them sales tax because they're tax exempt. And she said, but they're from, I don't remember what state, she's in Indiana. And they're like, no, we're tax exempt, you know, we're tax exempt. And honestly, I thought this for years. If you're tax exempt in the whole country, that the federal government gave you tax exempt, which, you know, obviously isn't true from what he's telling us.
Two different levels of government, federal and state. We're talking about sales tax.
Right.
Yeah.
But again, that's, I think most of us don't realize that at the beginning. You're told you're tax exempt, and the first thing you're usually taught is sales tax. So what advice did you give Angie?
Well, the one general rule of thumb is they'll say we're tax exempt. Here's our federal identification number, our federal ID number. That is not a state sales tax exemption certificate number. That's a federal number. It has absolutely nothing to do with sales tax. So Angie was in Indiana, and first of all, she needs in order for that group to be exempt from sales tax at her venue, she would have needed for them to submit an Indiana sales tax exemption form for that state. So
they would, and I think that was the advice you gave her, that she went back to them, is they needed to file in Indiana to get tax exempt status, and if they did, then she could give them.
Right.
And again, most of the time it's just people don't know. I mean, I was extremely involved in nonprofits, but usually was in the state at that time of New Jersey for everything. So it didn't really affect me because it was registered. All the ones I was working with were registered in New Jersey, and I was buying everything in New Jersey. So I never realized if I crossed the state line that I wouldn't have been tax exempt.
Yeah, you should obtain that certificate at the time of the sale and retain it for 4 years minimum. So now, if you want to move on, do you have another question?
Well, I don't think you have. Do you have these pages? They were stuck in the other ones. He has notes.
Yeah,
I have like 4 bullet points.
I got 'em.
Pauline walked in today and went, "Oh my gosh, you have notes now." I said, "Steve does." You have these. So where do you want to go with that?
Oh, we're still on sales tax.
Oh,
Let's
sorry.
Talk about as a seller,
Okay.
because
I thought we were talking about that, but go ahead.
no, we were
Go ahead.
we were talking about people buying from you and telling you that they were tax exempt and their need to
Okay,
get.
I would have thought that was the seller's perspective, but go for it. I'm obviously missing
Well,
something.
you
Go
got to
for it.
charge sales tax on the items. Okay, if you sell it to anybody, individuals are not exempt from sales tax. So, if you're selling in a state, like you go somewhere and you have a meeting and you're selling books, T-shirts, coffee cups, water mugs, or whatever you happen to be selling, they're probably going to be subject to that state's sales tax, which means you got to collect it and you got to send it to that state.
Oh, I see what you're saying. If
Selling.
the nonprofit is the seller.
Yeah, well, even corporate.
Yeah, but what you
yeah,
kind of made
yeah,
reference to that
right.
before with the stores. But
Right.
okay, so what you're saying is you're right. I totally get it, and I totally forgot this point. If you're a nonprofit, like say you're one of these fraternal organizations or whoever, and you're now having your meeting in 6 states over, well, even if you were having it in your own state, you have to charge sales tax.
Right,
Okay.
right. Like you might be selling them the Kappa Gamma pen. That's subject to
Gonna jump in with your sororities.
that's subject to sales tax. Students are not exempt. Individuals are never exempt from sales tax. So
And just because the organization selling it is a tax exempt organization, these are the kind of questions he deals with on a regular basis. Well, why do we need to charge sales tax? We're a tax exempt organization. It's
Yeah.
like, no,
Or-
that's when you buy, not when you sell.
or all the money we make from these sales goes to support our efforts. The state doesn't care what you do with the money; it's how you got it. And if you sold something in that state, now you might have to. Some states will have like an exemption for 1-day sales if you're there multiple days. Some states don't, but you might have to apply to be a vendor and get a sales tax certificate. There are some states that say the rate of tax must be posted so it is visually observant when the purchaser buys it. Or sometimes you have to have a sign that says sales taxes is included, or other states say sales tax is not included. You have to have all these different things that states vary if you happen to sell in different states or even in your own state.
Well, and also even one of the things I've learned is state to state have sales tax on different things, which I kind of knew. You know, some states charge on clothes, some don't charge on clothes, some charge on, certain types of food. Their definition of food, that's one of the big ones I've heard the stories about, is their definitions of food can be extremely different. So make sure you know what's going on before you need to do it.
Mm-hmm.
So, okay, anything else on nonprofits, sales tax, et cetera?
No.
You want to talk about virtual trade shows?
I do, because this is hot given the most recent pandemic and everybody doing virtual things and things like that. They came out with some guidance, and they do it by a couple of different, either hybrid or solely online. So this is a virtual trade show, hybrid model. So a hybrid model is an in-person trade show, but it has an online component, meaning you don't have to be there. You can still go to the trade show virtually.
You know what's interesting? This just happened. I thought
What's
of this.
interesting?
So the Fancy Food Show in New York City, which is huge. When I lived in New Jersey and I worked for a gourmet food store at some point, that's
Fancy food show.
Fancy Food Show. It's where all the gourmet foods, where all the people come and have booths to get stores and vendors to, pick up what they're selling. It's huge. I forget how many people I saw it brings in. It's a multi-day show, maybe 100,000 into New York City at some part.
A lot of fancy foodies.
So, think about it, especially now. I can only imagine what it's like now. I mean, when I knew about it, it was like 20 years ago. But they had to cancel. They chose to cancel. It was coming up. It was supposed to be the end of September, so about 3-4 weeks from now, they canceled it. But they're keeping their online component, Steve. They're keeping, so you can still visit the Fancy Food Show on the online show.
Mm-hmm.
So
the hybrid model.
it was hybrid. Well, now it's just going to be virtual.
Oh,
Started out as hybrid.
We're going to talk about that.
There we go.
All right. So if you have this hybrid model, that all qualifies for an exception as far as your unrelated business income tax. So a hybrid model, you got some in person, some online. It's only available during a trade show or plus 3 days before or 3 days after.
The real face-to-face meeting. I
Hybrid.
shouldn't say real.
Yeah.
Okay, so
Hybrid. So it's the same. You give them everything that they get at the in-person show. You get exhibitor information, displays, product directories, links to exhibitor websites. So it's just like you're there, only you're not there. It's virtual, right? So that
Right.
qualifies for the exception. Now,
okay, you're talking about nonprofit one here, so like an
Yeah.
association or something.
if you happen to do a virtual trade show solely online,
So,
no,
well, fancy
no-
food, I don't know if they're
no
nonprofit or not.
face-to-face, no hybrid, same content is available, exhibitor information, directories, links to the websites. There's no overlap with any in-person trade show that happens. It's all virtual. Does not qualify for an exception from the unrelated business income tax. I don't know why. I don't make up the rules, but that's what
Okay,
they
so
said.
any association that this past year, for example, only had a virtual, you with me?
Mhm.
That's not
A
they
virtual
can't-
trade show.
right?
Yeah, that would make the revenue the organization received from that subject to the unrelated business income tax.
But if they do a hybrid
Yes.
and they get to carry out the face-to-face part,
Mm-hmm.
it's okay.
It's an exception. It's an exception to the unrelated business income tax, if that's what you mean by it's okay.
Yeah.
Well, that makes sense.
So wait, what about if it's all face-to-face, like
Oh,
in the old days,
In the
Like-
old days, all right.
February 2020?
It would have been considered. It would have been an exception because it's educational adds value.
This ties in with
Yeah,
that.
yeah.
Okay. But if it's a virtual conference with a virtual trade show, if it overlaps with that, if it's only virtual, it's okay as long as it's attached to the education or no?
No. If it's all solely virtual,
Okay, even if it's attached to an educational
don't
part.
care.
Okay,
Yeah.
so point being, virtual trade shows are taxable. They're UBIT. They're unrelated business income tax. Well, that's
Yeah.
lovely.
Yeah.
And I guess corporations who do them. I wonder if now I'm gonna look see who does the fancy food show. I wonder if that's an association or some kind of nonprofit. It
There's
might
an
be.
association for everything. It's
There
probably
is,
a
and that's what
fancy
I'm
food
thinking.
association.
Well, it may be.
FFA.
It may be some kind of yeah. It actually might be, but yeah, that was one of the many ones that is. We are in the 3rd/4th week of August, and that was one of the ones that just came out in the past couple of days when we're recording this, along with the NRA convention being canceled in Texas.
Which wasn't
And-
too far in advance, right? Was like
No, that's very quick, and
like a week or two before it was supposed to start.
yeah, there were a bunch of them that have been canceled that are supposed to be in the next 3 weeks or less that have been canceled this week. So, yeah. So, okay, I'm sorry. Virtual trade shows, anything else?
Nope.
Okay. And then because everyone, okay, so whenever I teach and we talk about shipping, we talk about VAT tax, except we don't really because it is one of the most ambiguous things. I'm pretty good at getting my head around things if I really make myself and ask enough questions and research enough. And here's what I've learned about VAT tax is you will be charged it in most countries. In a lot of countries, you can get it back. It's different in every country, and you don't want to try to get it back yourself. You either have a department in your organization or you hire a company to do it that gets a percentage of what they get back. So that's my take on VAT tax because even the name doesn't make sense to me, and I've tried.
I would say that's an excellent summary of value-added tax. Pay another company to get it back. It's just
You'll
complicated.
find that a lot of CVBs, DMOs, they will actually like waive VAT tax or whatever as incentives to get you there. But sorry, go ahead.
It just changes all the time, and it changes whenever countries, United Kingdom went from 17.5% to 20%. Germany last year actually reduced it from 19% to 7%.
Oh, wait, I have a question for Pauline. You may know too, because I know you've traveled in Europe. But so with the European Union, when you cross into another country that's part of the EU, do you have to pay VAT tax on stuff? Or is it like, oh, if you're part of the EU, we're all good?
Not that I know of.
But
Not that we've done before, anyways.
But an individual can't get it back anyway, come to think of it. This is strictly a organization thing. Individuals can't get VAT tax back. I know I learned that finally. But
Well, the thing is, there's 140 countries that impose a VAT tax, and
out of 180 something,
but
whatever there is today.
when it comes to event-related goods and services, they're all over the board. Some will charge VAT on this, but others won't on the same thing. So it's or even the type of meeting, whether it's an incentive meeting or a sales meeting, there's different VAT tax. It's just absolutely bizarre.
Well, and what really throws me is the actual name, because I remember asking Steve a long time ago, so what does this mean? Value added tax. Now, the concept, what he tells me and what I've read, makes sense, but not with what we're talking about. So it's the idea of you take a product or a service, maybe, but definitely a product, and it's in one form, and then you improve it, and the value added tax is on what has been added to improve it. And honestly, and it's not that I haven't tried. I mean, I keep trying, as you could probably hear me struggling right now. Like, I get that concept. It's almost like buying something wholesale, creating something out of it, selling it retail, and you have to pay the tax on. And that's really common, like here in the United States. If you buy something wholesale and you're a company, you don't have to pay sales tax because you're going to charge the sales tax on the final product you're selling. So I understand that gap thing, like, oh, we improved it, so somebody has to pay tax on that. But I haven't been able to figure out how that really applies to our industry.
Well, like I say, some of them will mention specific things regarding meetings and events in particular. So does that help?
No.
Oh, okay.
No, because like I'm thinking food. Okay, the hotel buys food wholesale. So, assuming there's sales tax in that country,
They add value to it by cooking it.
Right,
Mm-hmm.
but to me that would just be a sales tax then.
On
the.
Yes, it's very comparable to a sales
but
tax.
there's some countries you go to and they charge you sales tax and VAT tax.
Yes, there are.
Okay,
do you think it's supposed to be?
We tried to make that as clear
Right.
as mud for you today,
Right.
just so you could understand that you are not the only one that doesn't get it.
Right.
But it always comes up, and
Canada calls it a GST, goods and services tax, not necessarily a VAT tax.
That's right, they do.
In the Caribbean or the Caribbean, whichever you prefer, they don't allow they don't give refunds of VAT tax. Just we're not doing it. So, and Mexico got rid of the VAT tax here lately.
Did they get rid of it entirely? Because
Yeah.
I know they did a big thing for meetings and events years ago, where
It'll be back.
if you were under meetings and events, they weren't charging you a VAT tax. It was when
Right.
they really started going for international meetings, like 15 years ago or so.
Right. It's just it's ever changing, and it's complex, and they have people that specialize in that. I don't deal with it.
Yeah. Let's put it this way. I can tell you it's bad. There's two things I'll go and ask him tax about. Sales tax. Although sometimes he can get into sales tax and talking about why bubble gum is a food in some states and not in others, and therefore how it's taxed in some states and not in others. Oh, back to sales tax. Well, no, I'll go back in a minute. VAT tax is the only other one I've ever asked him about any tax question about anything. I mean, he'll talk about inheritance tax. He'll talk about...
Or I just found out about the airline...
Okay, you can do that one in a minute.
Okay.
But then we really need to let these people go because we've gone for so long.
Mm-hmm.
But VAT tax is the only one. He's sales tax. He would go, yeah, I don't really like sales tax. It's my least favorite. Blah blah blah. But here, this is what you need to know. But VAT tax, he just looked at me at one point and went, nope, don't get it, don't want to. And I'm like, oh, this is bad if he doesn't want to talk about it. But I just thought of something about sales tax. Another example of how sales tax can. I mean, we all know that, frequently when you go to a meeting, you are paying a city tax, a county tax, a state tax in the United States. Some of them have recently increased, but that's another story. But anyway, at one point a few years ago, some of the cities, and I think Philadelphia was the first city, who wanted to put an additional 1.5% tax on any carbonated beverages, right? That's what it was.
Correct.
And you think, yeah, okay, whatever. Until you think about, so this was things in cans, in bottles, out of the,
Pitchers.
what?
Pitchers, yes.
Pitchers. Well, I
Mhm.
was thinking of what you fill the pitchers with.
Mhm.
But picture a ballroom with all those round tables with a pitcher of soda, pop, whatever you choose to call it. What do you call it?
What?
Soda or pop? You probably picked up whatever New England says.
What do you call Pepsi?
Soda?
Soda.
Soda.
I
Yeah.
say
I think
soda.
so.
And see, I've moved around so much, I don't remember which areas of the country call it soda, what call it pop, and I know people who called everything Coke. Coke, orange Coke, grape Coke, root beer Coke. Okay. So anyway, but think about all those pitchers, and let's say a pitcher is about, probably about a half gallon, I'm guessing.
Usually 60 ounces if it's the same as a beer pitcher, which I'm familiar with.
Mm.
There may be more than one pitcher on a table.
Yeah,
might
exactly.
have
Well,
light.
usually it's like a soda, a water,
An
an iced
Uncola.
tea, or whatever. But there's at least one pitcher of carbonated beverage on it. So you've got 100 tables in there. That's 100 pitchers of it, and a good chance it's going to be refilled once. So let's say that ends up being a gallon, and you got 100 gallons, and now you're paying an extra 1.5% sales tax
Per ounce.
What?
Per ounce.
Oh, per ounce. Yes, that would make sense. Per ounce. Think how much. So a gallon's what? 128
Here we go. Get out
ounces.
the calculators.
128 ounces.
Times 100. All right, she's thinking now.
Yeah, but I don't have my calculator
Okay.
out. So anyway, you get the point. Like, this could truly affect your budget. So weird things like that where you think, yeah, but that's why I'm always saying read the news, because these things can go up in the greater Boston area, Boston, Cambridge area. They just enacted, how much did they take the destination tax up to?
Well, for hotels, 50 rooms or more, created a special bureau to help advertise the Boston and Cambridge area. What was it? 1.5% more
Something.
tax. Another
On top of what
on
the
top
tax
of the
is.
regular room tax and sales tax and everything.
So if you're
else.
doing a meeting, and this is not a slam toward Boston, I love Boston, but every city, and there may be a lot of other cities that do this too to help come out of the pandemic. So be aware that a lot of those destination taxes could be going up in the next few years. So comments, thoughts, Pauline and Kelly, you awake?
They're,
Yes.
they're just
so
astounding.
Did you learn anything?
Yes. Thank you, Steve.
Did you learn anything?
Oh my God, yeah.
Yes.
I know.
Hopefully it stays, but I definitely.
Again, well, what I think of is as long as enough retains that you go, oh, I remember him saying something
Yeah.
about that. I got to go look it up or go ask him.
Mhm.
I mean, to me, it's awareness. And in one of, I think it will have been up by the time this one comes up, when I was thinking about what I want these podcasts to be, and I realized it's what I told my Boston University class this past spring, is I want you to learn, I want you to think, and then I want you to apply it. And I guess that's kind of what I do too, is I learn things from a weird variety of places, including Steve. But anyway, weird variety of places, and then I think about them, and you don't want to be around me when I'm thinking about things, and then figure out how it applies. So hopefully, even though you thought, yeah, tax, whatever, that some of these really did help you. These are issues that come up all the time: sales tax, tax exempt, independent contractors.
Unrelated business income tax.
Well, if you're nonprofit, yeah. And again, Steve, why don't you give them your email? That if they have any
Oh.
questions, and he seriously means this, that you are welcome to email or call him about anything tax related.
I have an email of Steve the Great at joannedennison.com.
Oh yeah, did you know he got that while
At
you were gone?
Steve the Great at
And Pauline's her
joannedennison.com.
jaws on the floor.
I did not know that.
Well, I figured after a while, at first it was going to be Steve at joannedennison.com, and it just became easier
No,
to
it
just
has
make
to be
it.
the whole thing.
Right,
Steve the
right.
Great.
and so, I mean, he also can be reached at Steve the Tax Translator.
My close friends just call me STG.
Like Devin. Yeah, Devin has named him STG. Um, so he's very serious about that. He likes to be a resource. He'll talk tax the way we'll talk anything, meetings and events. So I hope, even though this ended up being much longer than our usual podcast, like an hour and a half. But again, the beauty about podcasts is you put it on pause and you go back to it. So, whenever it's convenient for you to chop it up. Also, you may have heard on prior places or seen it in the e-guide. Oh, e-guide, Steve. How can they get on the e-guide? It's my kind of sort of newslettery thing.
They can text Meet Guide, MEETGUIDE, to 22828. Meet Guide,
I never can remember the
22828.
number. So that's one thing for you to know, but you might have seen there, and we've mentioned it on some prior podcasts, he's putting together, I think he's decided to call it a booklet of living with a meeting planner. So if you have any stories of your friends or family thinking you're odd because you have an obsession with binders, lists, little white lights, correcting, the Olympians went up on the podium. It's what you stand on, not what you stand behind, because that's a lectern. Things like that you're willing to share. You may have read he wrote 2 prior articles on this. Please send them to him, and you guys can get in a chit-chat about it going into the booklet, and then you have something to give all these people who think you're odd to show that they are not the only one, that you're not the only one who does what you do, and they're not the only one who thinks that it's odd. Again, check the website, social media, if you're interested in any of the upcoming CMP classes. There's also some new stuff coming down the road, and yeah, that's good enough for now. So we are going to sign off, and let's see, we'll start with Pauline since she's back. Why don't you say something in French to them?
Yeah. How do you say goodbye?
Bonne journée. Au revoir.
Au revoir.
Au revoir.
Yeah, I'm going to say bye because I'll probably pronounce it really badly. But anyway, Pauline, love having you back. We're so
Thank
thrilled
you.
to have you. We really did miss you. Kelly, true meaning of the word trooper, because just as you went to go back and see your family, of course, Mary Ann's schedule changed, and Kelly has been holding down one full-time job, and this one, which was becoming a full-time job because of other people's schedules changes. So thank you. I'm very, very grateful for everything you've done in the past 4 or 5 weeks. And Steve, would you like to say something?
Listeners, thanks for riding along on tax and meeting planners, and we cruised through all the intersections and didn't have any collisions. And make sure you tell Mom and them about this podcast. I know she's looking at me like she's crazy.
Yeah, I'm sure if you could see my face right now.
We
it's
took
like,
a little ride. We
where
went,
we go?
intersection,
Is this
collision.
because we went to see Jungle Cruise the other night and you got into all the puns or something? I don't know.
Yeah.
Anyway, but thank you. We really appreciate it. Hope you did pick up a lot of useful information. Again, don't necessarily have to memorize it all. Just know that it's there. Be aware so you know what questions to ask and what to look up and find answers for when it's time for you to do something. Very grateful for you coming and listening to these, whether they're 30 minutes or an hour and 30 minutes and everything in between. Really appreciate it. As Steve said, please share if you think it's valuable for other people. I know a lot of you are listening to it while you're driving or cooking, or I'm trying to think of other pictures I've gotten recently. Driving, well, no, they didn't take a picture while they were driving, or power walk. So glad to have you with us and look forward to being with you next time. Thanks a lot. Bye-bye.